Hey everyone, welcome back to the channel. Today we're diving into a topic that often gets tossed around but has some crucial distinctions. Startups versus small businesses. You might hear these terms used interchangeably, but trust me, there's a world of difference in their DNA. Stick around because by the end of this video, you'll know exactly what sets them apart. Think of a startup as a rocket ship aiming for the moon. The primary goal is rapid growth, scalability, and often disruption of an existing market or the creation of a new one. They're typically driven by innovation and a desire to become a large, influential entity. Think companies that started in their garages and are now a household name. On the other hand, a small business is more like a reliable, well-built car designed to serve a specific community and provide a sustainable income for its owners. The focus here is often on profitability, serving a local need, and building a stable operation. Think about your favorite local bakery, the corner bookstore, or a family-run plumbing service. The mindset difference really boils down to ambition and the scale of impact they're aiming for. Startups are often okay with initial losses in pursuit of massive future gains, while small businesses typically prioritize staying in the black. Startups are generally built on innovative ideas or a significantly different approach to existing problems. They often involve higher levels of risk because they're venturing into uncharted territory. There's a real chance they might fail, but the potential reward is also much higher. Small businesses, while they can certainly be innovative, often operate on more established models. The risk level is generally lower because they're often catering to a proven local demand. They might introduce new products or services, but it's usually within a more predictable framework. So while both can be creative, startups are typically pushing the boundaries of what's possible, which inherently comes with more uncertainty. Startups often rely on external funding like venture capital, angel investors, or even crowdfunding to fuel their rapid growth ambitions. They're looking for significant capital injections to scale quickly and capture market share. Profitability might not be the immediate concern, it's about expansion. Small businesses, on the other hand, typically rely on personal savings, loans from banks, or credit unions, and reinvesting profits for growth. Their growth tends to be more organic and sustainable, often at a more measured pace. Think of it this way. Startups are often playing a high-stakes game with borrowed money aiming for exponential growth, while small businesses are building a solid foundation for long-term, steady expansion. Startups are designed for scalability from day one. Their business model is often built to be easily replicated and expanded to reach a larger audience, often globally. Their initial structure might be lean, but the intention is to build a large organization quickly. Small businesses are often tied to a specific location or community. While some might expand to a few locations, the core of their operation is usually more localized. Their structure tends to be simpler and more focused on the day-to-day operations of serving their immediate customer base. The key difference here is the inherent design for massive expansion in a startup versus a more geographically or niche-focused approach in a small business. Startups often aim to make a significant impact on an industry or even society as a whole through their innovative solutions. The exit strategy, whether it's being acquired by a larger company or going public like an IPO, is often a key consideration for investors and founders. Small businesses, while they certainly have a positive impact on their local communities by providing jobs and services, their impact is often more localized. The exit strategy might be passing the business down to a family member, selling to another local entrepreneur, or simply continuing to operate successfully for years to come. An IPO is rarely the goal. The focus for startups is often on creating something revolutionary and potentially highly valuable for acquisition, while small businesses are often focused on building a legacy and serving their community for the long haul. So there you have it. While both startups and small businesses are vital to our economy and driven by entrepreneurial spirit, their goals, approaches, and potential trajectories are quite distinct. Let me know in the comments below, what kind of venture are you most interested in? If you found this video helpful, don't forget to hit that like button, subscribe for more insightful content, and ring the notification bell so you don't miss our next video. Thanks for watching, and we'll see you in the next one.